Bismillahirrahmanirrahim. Assalamu alaikum and welcome to another lecture. In today's class, we are going to cover a very important and interesting topic, that is the performance evaluation or the performance appraisal of the board of directors and also the insider trading. So, first, if I talk about the performance appraisal, the appraisal means the review or the evaluation of something. So, now you are going to do the review of the board's performance. All right. Now just think that you are the boss of the directors and you are going to perform the evaluation, that how they perform. Did they perform good? Did they perform bad? All right. So how you will do this? What are the criteria on which you will assess that whether they perform good, whether they perform bad? All right. What are the KPIs? So I will tell you that what are the KPIs, but we are going to do the performance analysis of the board on two bases. Number one, on the board level basis, now we will do the evaluation of their performance of the whole board on the collective basis, that how the whole board performed, and also we will do the analysis on the individual basis, that how the individual director performed. So both collective basis, and also the individual basis, we will do the analysis. So what are the criteria? What are basically the KPIs which you should look, that whether they achieved it or not, or how they perform? All right. So number one, look at that how much they contributed towards the maximization of long-term wealth of the shareholders. All right. Did they contributed to it or not? If they did not, they perform bad. If they did, they perform good. All right. Achievement of the financial and the non-financial target. Check whether they achieve the financial and the non-financial targets which were set for them in the start of the year. How many targets they achieve, how many they could not. So this shows their performance, right? Effective risk management, internal control, and financial reporting. Check that how effective their risk management was, how efficient, effective controls they designed and implemented, and how effective their financial reporting was, how accurate their financial reporting was. These are the criteria which shows the performance of the whole board on the collective basis. Compliance with the regulation. See that how much the company was compliant with the laws and regulation. What were the non-compliances were made by the companies, because they are the leaders. If the company is making non-compliance, that's their negligence. And because of that, how much cost the company had to bear because of their negligence. See, check this thing. Regular communication with the shareholders and solving their concern. You have to see that how much effective and regular communication was they did with the shareholders, and how much they comforted and they solved the concerns of the shareholders, because they are the principal, they are the owners of the business. So that's your duty to explain them, to solve their concerns, right? That for that you are appointed. Corporate governance and management of the board. How well your corporate governance work, and how well you actually manage the board and the business, right? That shows the performance of the whole board on the collective basis. But now we also need to look at the individual basis as well, because sometimes if the whole board is not performing well, that doesn't mean that everyone is not performing good. There might be some people who are doing good, or maybe the board is doing good, but there are some people who are not doing good. So you have to check on both bases, right? So for the individual basis, if you are evaluating them, what are the criteria? Number one, achievement of individual performance target. Now check the individual targets, for the finance director, for the IT director, operational director, production director, research and development director, operational director, or any kind of director. Check the targets of that department or that individual director, how many targets that director achieved and how many he did not. All right. Based on that, you will come to know that how the performance was. Contribution to the strategies and resolution of the problem. Who was proactive, who was actively participating in making the strategy, how much they contributed towards the resolution of the problem. All right. Who was dedicated to the company's vision, mission, and the objectives. Compliance with the ethical values. The ethical values, these are connected with the individual's conduct. So now check whose conduct was of the high ethical values, and who was actually breaching the ethical values of the company. So that will come to know about the performance, right? Attendance in the board meeting. Who was actually taking part into the board meetings, and who was just careless and non-serious about the board meeting and not attending the board meeting. CPD, who is actually, uplifting the continuous professional development, who is continuously, regularly keeping himself updated for the environment, new challenges, new information, new regulation, laws, requirements, so that he can deliver best. Right? These are the criteria which shows the performance of the individual director. All right. And now, sir, what are the advantages of doing this? What are the advantages of doing this? What we will get by doing this? Very simple. You will identify the weak links. That what are the weak areas of your board of director, or who are the directors who are actually not doing good. All right, by performance appraisal. Identify the performers and useful in recognition of the performance. Again, by performance appraisal, you will identify who are the good performers, who are the achievers. And when you will recognize their performance, their achievement, it will give them the motivation. You will give them the reward, bonus. So when they are motivated, when you will recognize their performance and the achievement, they will do even better in the coming time. All right. Identify the training needs. You will come to know that what are the areas in the board, what are the directors who needs the training, who are maybe not morally good, who are not ethically good, who are not technically good, who are not doing CPD. So there is some training needs, so there is some gap that you need to fill, that you need to fulfill. So you will identify this. Helps in deciding the reappointment of the board of directors. When the time comes about the reappointing of the director, now you will see that who perform good, who perform bad, and you will be able to make a sound decision that which director to reappoint and which director to say bye bye, don't come to us again. Entitle of performance bonuses. Again, when you will be deciding that which director should get the bonus and which should not, performance appraisal will help you. All right. Now the next topic, that is the insider trading, and it's very easy, right? So if I talk about the insider trading, the very easy definition, it is buying or selling of the company's share by its own directors or senior executive based on the information obtained due to immunity, and the information is not publicly available yet. So now you are taking advantage or taking the leverage of some information that is not publicly available, that is available to you just because you are the directors, you are the senior manager. All right. So this doesn't give you the right that you will use this information for your personal gain, for your personal interest. And the insider trading is that when you use this information and buy or sell the company share. For example, if I have the company share and I know that the company is going to be in losses in the coming time, so I will sell the shares. People don't know about it, they cannot sell, but I can. So that's wrong, because I'm using some information that is confidential, or that I acquired because of my agency relationship. I had the responsibility to work in the best interest of the shareholders, and I am working in the best interest of myself. So that's something injustice with the agency relationship. You cannot do it. For example, you came to know that the company is going to be profitable in the future, or at the year end the company is going to report the profit. So you acquired or you purchases the share because you will gain the capital gain, right? That's wrong, that's insider trading, and that's illegal. All right. So why it is illegal and unethical? It's very simple. Directors are supposed to act best interest of the shareholder and not to make the personal gain. As I said, if insider trading is allowed, then the director focus would only be on the short-term decision making. They will try to purchase the share, do the strategies or do the action which will increase the value of the shares in the short term, and they will sell the shares, earn the gain, and they will leave. So that will, misguide them towards the wrong path, and they will not work for the long term betterment of the company. They will just focus on the short term gain so that they can earn the gain from the company shares. All right. It harms the reputation of the security market of the country. Again, if any country, the security market, the stock exchange in which these kind of activities are going on, the people will not put their money into it, because now there are some players who have the leverage, who has the undue advantage, and they can gain, they can they can outperform everyone. So no one is going to invest or take participate into such kind of markets, right? This will disregard your country's share market. cost of capital increases again, it will increase your cost of capital, because now the people will not invest into your companies, because they will know that your directors are not good, and if they are not investing in your company, you will definitely find it difficult to arrange the finance, to arrange the funds, and whatever the funds you are going to get, it will be on the high cost. You have to pay high cost for it, and again, if you have to pay high cost for it, shareholders will remain, or they will be left with very little profit. So that is how it is going to have a huge impact on the whole society, business, shareholder, everyone. And that is why the insider trading is illegal and unethical. All right. So I hope that I was able to explain these two topics with clarity to you. See you all in the next lecture. Till then, take care of yourself. Allah Hafiz.